In today's video, I'm going to discuss bear market rallies as well as share the source I've used for the last 20 years to help me spot market tops and bottoms. This source of information was vital in helping me navigate the bear market of 2007 and 2009, and that's a bear market that propelled me to financial freedom and allowed me to leave corporate America when I was 34. But before we get into that, for those who don't know who I am, my name is Travis Wilkerson. I am the former U.S. investing champion for the futures and options division, but I go by Trader Travis online. And for the last about 10 years, I've been sharing the tools, techniques, and strategies I use to achieve financial freedom and leave corporate America when I was 34. And so the first thing I want to talk about is the bear market rallies. And so what you're looking at is the bear market of 2007 to 2009. And these little trend lines I've drawn right here shows you the rallies that happened during that bear market, which they call the Great Recession, where the market fell about 50 something percent. And if we track the time frame, so the market has slow, steady decline for about a year, year and a half. And so we track it here where it bottomed about March 17th, 2008, and it started going up here until about May 22nd, 2008. So about 2 months of upward movement. And that was pretty close to the market top. So a normal human reaction, people will think, oh, this is the bear. Well, they would think it's a market correction, right? And they're saying, oh, this correction is over. The market's going to go back up because everybody was like on a high, a profit high, right? Everybody was just so greedy back then. I remember that. Like nobody believed that it was going to be a bear market. And that's the problem. Like they just got caught off guard because they allowed their bias. They traded what they thought versus trading what they saw. And anybody who follow chart technicians, technical analysis, that's the like the art of reading stock charts, right? We can see prices were below the 200-day moving average. That's a long-term moving average. Prices were saying that, hey, we're not healthy. And prices tricked everybody and started falling again. And then again, here in July of 2008, it had a short rally there to about August 27th. So, month and a half of going up, not a few weeks. Think about it. It goes up for a month and a half. That's long enough for complacency to set in people, for people to think, okay, they're like, oh, finally, I'm not losing money. I'm making money, and they're hoping and praying that the market uh, falling is over. And this is what the market usually does. It tricks people. And it's like, haha, I got you. And it fell off a cliff. But even after it fell off a cliff, it had another short rally here from about November 2008 to January 2009. And then it fell. And this is where it bottomed here in March 2009. Now, look at the trend line I drew here at the bottom. They looked like a regular old rally, right? You're like, well, how do I know when this is just a bear market rally or this is actually the bottom and the market's going up? And that's where you can use technical indicators. You can use sources that I use, and I'll share my source here in a moment. Or you can use just standard tools like the 200-day moving average. And I'll draw a circle here, and this is what I'm teaching my wife and kids, so that way they don't have to use anything complicated. You can just look at the prices, and are prices below the 200-day moving average or above the 200-day moving average? If they're below the 200-day moving average, that's a sign that prices are not healthy. It's most likely in a severe market correction or a bear market. Or if prices above the 200-day moving average, is like, hey, we're healthy. We're most likely back in a bull market. That's generally what happens in a bull market. Prices stay above their long-term moving average. They don't always stay above it. Sometimes they dip below it, but for the most part, it's fairly reliable for people. You won't become like a pro, but you'll get good enough results if you just use that simple tool. I also have two additional tools I use, and the first one, this is the source I used for the last 20 years to help me spot market tops and bottoms, and it's the Investors Business Daily. Now, what they have is the big picture here, and this is October 21st, 2022, and I'm going to zoom in to the current. This is the current bear market of 2022 we're looking at, and I have trend lines drawn again on this one, just showing you bear market rallies. But what I want to show you is this rally right here that started about June 17th, 2022, and it ended about August 16th, right? If you can remember in your mind what I just showed you in the previous bear market, it had another about a month or two long rally too, right? It prices hit the 200-day moving average and it fell off a cliff, right? But we haven't fell off a cliff yet. But touched the 200-day moving average and tricked everybody, fell back down. So what I want to show you here is the reason I have October 21st, 2022 pulled up is that the Investor Business Daily says that we are in a confirmed uptrend as of 1021, which is this date right here where I'm going to put an arrow. So, is this the market bottom, right? Or is this going to be another bear market rally? If it is the market bottom, look how close they called it from about 6 days from the market bottom. That's how reliable Investors Business Daily has always been for me. They've been extremely reliable at predicting tops and bottoms, at least within weeks. I mean, weeks are close to the market tops and bottoms. Right? But you can't just look at the big picture and what they say. You actually have to read what they say. And if you read what they said right here, this, given that this is likely a bear market rally, risk remains elevated. It is not the time to aggressively jump back in stocks with both feet, but to take a measured approach. I happen to agree with him. I think it's a bear market rally. But anyway, what I want to point out here is that during this last 2 month rally back here, they also said the market was in a confirmed uptrend. And some people can get upset about that. And so let me point back there. So here we have on August 15th, 2022. So now we're looking at this, right? When the market went up here, August 15th. So this is that bear market rally right there. What did you see Investors Business Daily said? Confirmed uptrend. But it wasn't a confirmed uptrend, was it? It was just a bear market rally. Again, you have to read the paper. Most likely they were saying stay cautious, which they were. They were always advising people to stay cautious. Don't just go jumping back in. And then the market fell again. And so what you want to see is you don't want to see if they're 100% right. You want to see if they're fairly accurate enough to make money. If they call a market uptrend, right? Do they call the market in correction or going back to a bear market when it falls again? And that's what you want to see. Okay, when it started falling again, how accurate were they? And so you see that, and I have those dates pulled up here. So August 26th, they're like, uptrend under pressure. And then on September 16th, they were back in correction. All right, so as it was falling here, they were like, hey, market's under pressure here. Then by the time you got down here, they're like, okay, yeah, we're back in a correction territory. So that's reliable enough for me. So even, which I actually did get in some trades based on that, and the second source I'll share in a second, I got into some bullish trades, low risk, but when it corrected, I lost money, but I didn't blow out my account because it was only a few weeks since I got in that trade, and I'm like, I didn't lose that much money. And they gave me enough time to get out if I so choose, which I did not because the trade I got into was a max loss trade. I was like, I don't feel like timing the market getting in and out. I'll just invest a little bit of money and accept max loss if it comes to that. Here's the second source, Market Club. Same deal here. That 2 month rally I just showed you here, Market Club, right? First of all, we come back here and Market Club signaled us. This is the signaled us here on January 18th, 2022 that the market was under pressure. By the time January 24th, 2022, it lets you know this is the red monthly trade triangle. It's a long-term entry and exit signal letting you know, hey, we're most likely going to fall. Stocks are most likely going to fall in the next few months. And so they called the market bear market back in January 2024, January 24th, 2022, way before anybody else. But anywho, and so we can't ignore the weeklies. The weeklies will catch the bear market rallies. And so like this one, the weekly was letting you know that it was a temporary bottom. The rally continued. Then it triggered a red monthly trade triangle, right? Saying, hey, the bull market is back. A few days later, they're like, nah, stocks are going to fall again. That's where the red weekly could help you and let you know that, don't really trust the monthly. Be cautious here. And just like Investors Business Daily, they both were calling market uptrends and market back in correction around the same time. So the dates are a few days apart, but they're both about accurate. They're letting you know that, hey, we're in an uptrend, but nope, market back in correction, and you got the red monthly here. So just like Investors Business Daily is now saying we're in a confirmed uptrend, Market Club is saying we're also in an uptrend with the green weekly. And in order for this to be an official bottom, or most likely a bottom, we will get a green monthly trade triangle. But I'm not buying both symbols. I love both of these sources. They've helped me make an immense amount of money. They're accurate enough for me to make money. They're not exactly 100% correct, right? Spotting the exact bottom on the day. but they're within weeks of spotting tops and bottoms, and I am cool with that. That is good enough for me to work with. But based on my experience, based on what I have been through and all the bear markets I have traded through, like the bear market of 2007, 2009, I'll show you one last time, right? I feel like we're in this type of rally right here where it's going up and then it fell off of a cliff. In my gut, and the market doesn't care what I think, right? But in my gut, I feel like that's the rally we're currently in right now. We're going to go up and then have one more nasty, scary leg down. It's going to fall really far, fast, and then the bottom will hit. That's what I think. Only time will tell. But as I always tell each of my clients and members, we trade what we see, not what we think we're going to see. And so I'll end with that max loss rage I told you about here. I am actually updating my best-selling book, and I'm sharing the template, the more recent template I'm teaching to my wife and kids, and it involves using the 200-day moving average, and it's one of the strategies. I'm going to be teaching 2 strategies, so I've expanded the book. It's like 4 times longer than it used to be. Before it was like a pamphlet. Now it's going to be an actual book, right? But anyway, one of the strategies I'm teaching is something I call the Buffett call option, and so I actually have a call option in place here, and it's actually up. In the middle of a bear market, it's up $335. And so this case study, I'm actually recording this case study to go along as a bonus for people who purchase a book. So when that book is done, I will let you know if you're interested in grabbing a copy. And then as a bonus, you will get the videos to this case study, watching me grow my account and grow this account, because it's one of the strategies I'm teaching people to use to rebuild their account after the bear market, right? They've lost a lot of money in the bear market. You can use this strategy to rebuild your account in a very short amount of time. So that's all I have for you. You take care, and I'll see you in the next training video. Bye-bye.